All right, welcome back to the Free Life Agents podcast. This should be FLA number 35. I think this is what the episode number is. Could be off on that. I'm not really sure, but it's around that area.
Come
But it
on.
doesn't matter because we have a guest today that's going to overshadow all of that, all of that trivial crap. The guest today is a real powerhouse real estate investor, real estate agent, and real estate team leader. We're going to be talking all about investing and why real estate agents should invest in real estate and how they can do it. So, without further ado, I want to bring on my guest today. Really grateful to call him a mentor and a friend as well. But the founder of Real Estate Investment Fundamentals, Brant Phillips. Welcome, Brant.
What's up, everybody? What's up, Kobe? How are you, man?
I'm good. I'm even better now that we're on this podcast, and I finally get to interview you. You're the last person from our EXP leadership line that I get to interview here on my podcast, so I'm super
Save,
excited about it.
save the best for last. I appreciate that.
Yeah, save the best for last. But I'm sure there's people listening to this here that know who you are. But for those that don't know you, and don't know your resume and how impressive it is, would you mind just kind of introducing yourself for the listeners here, to kind of tell us about who you are and going through like that journey of how you got into becoming such a great investor?
Yeah, thank you, man. Yeah, how impressive my background is, or whatever. Just for what it's worth. It's not as impressive as I like it, right? Like I'm always growing and striving to
Yeah.
do more. But I'm a real estate entrepreneur,
Mhm.
and didn't always know that about myself, or that I was even an entrepreneur. How I got here though was I was a very disgruntled human being. Okay, I was not happy with the trajectory of my life. I had, after serving 7 years in law enforcement, and I got married. My wife and I had a child, and just decided to make a change. And I was happy in law enforcement, but there's a lot of politics that are there that I didn't get along with. And then obviously you're not going to make a lot of money, which I really didn't care about. Like making a lot of money was never really a big thing on my life list. I was more, I guess, pursuing just being happy, and, doing something I enjoyed doing and things like that. And I didn't have a lot of goals and things like that in life, other than just kind of be happy and do something I enjoyed, and have a good marriage and a great family and things like that. And so law enforcement wasn't helping me reach the family goals, right? So left law enforcement for corporate America, and wanted the standard work hours and stuff like that, and I absolutely hated it from day one. And so that kind of led me to, like, all right, what else what else is out there? And so at that point, to give everybody a little context, that was a little over 15 years ago. I'm 47 now. And so it was kind of in the early 30s when I first went to corporate America. Um, I guess I was about 30 years old, and hated that day one. I stuck it out. First 2 years, I just did it and complained and kind of bitched and moaned about it, but I didn't take action to do anything really about it, other than read a few little books here and there and dabble. But I wasn't really committed to making a change, because I was getting the golden handcuffs, so to speak. I'm like, well, I can get promotions here. I've got a company car. I could get raises. I could climb the corporate ladder. But to be honest, man, like those were thoughts that were just, they were depressing to me. So after about 2 years, I just kind of said, all right, enough's enough. What what can I do here? And I really began, this is how, you know, all change begins, right? It's just getting that mindset of like being committed to something. And so I absolutely made up my mind, like, I'm going to do something different. I don't know what. And then, read Rich Dad Poor Dad, met a couple of people, attended a couple of events, read a couple more books, and I just went full fledged into real estate. Um, and I was wet behind the ears. And this was 2007. And At that point in time, I feel like I'm going on a little too long, but
Right.
I'll speed it up. My wife and I were at a point where, we had, when we got married, we had zero financial knowledge. We did a lot of stupid things. I mean, we put like wedding stuff on a credit card. We both had student loans, et cetera, et cetera. And we went through Dave Ramsey thing. We had just finished it up, and we went through Dave Ramsey training at our church, which was good, because we didn't have even that knowledge of like there's bad debt, and we had a lot of it, and so we cleaned it up, got to a point where like we were debt free. And then I learned about good debt from Robert Kiyosaki, right? And so Dave Ramsey, like, there's no such thing as good debt. It's all bad. It's all evil.
Yeah.
And so it had like this little, like the cartoons where you've got like the angel and the devil on your shoulder.
Right.
That's how I felt like. I'm like, I've got Dave Ramsey talking in one ear. And it's like, all debt is bad. No, no. And then Robert Kiyosaki's over here is like, no, there's good debt and leverage debt and all this type of stuff. So I literally used a credit card because my wife was in an apartment. We had no money. And you borrowed $7,000 against a credit card we had just paid off to buy a rental property. And Kobe, from there, kind of the rest they say is history. I bought 10 rentals that year, basically with no money down, or leveraged money from credit cards, and bought 10 rentals that year. 10 rentals my second year via partnerships. Bought a few more in 2009, all while still working my full-time job. I didn't quit my job. I kept my job while I built up my portfolio and my income and my skill sets so that I could feel confident going full time. And then 2009, I went full time, pulled the plug from my job. And that's why I say I'm just a real estate entrepreneur. I'm very ADD, like a lot of entrepreneurs, a lot of people out there, and I've just kind of pursued it. And so, since I started, we flipped hundreds of homes. We've done new construction development, RV parks, mobile home parks. I've done multiple, ran a coaching program for many years and ran a lot of live events. We've do a lot of private lending. We've done syndication deals on land deals, development deals, written a few books, and built a fairly large team, hundreds of agents here at EXP. And I know that's how you and I paths
Right.
crossed. And man, that's it, man. I'm just a hard charging real estate entrepreneur. Love what I do, and love helping others to just educate, inspire, and equip for them to go out and do the same.
Right. That's awesome, man. I mean, like, giving people context here, like when we think of investing, especially with the agents on my team or people kind of in our network, I always say, "Oh, you got to talk to Brant. You got to talk to Brant. Brant's like the godfather of investing in real estate. He owns multiple mobile home parks, development deals, different things like that. If you can name it in real estate, Brant's done it. Brant's doing it. And then when you hear like your story, you kind of just started out in a position where it's not even. You can almost think of it like you were almost in a position of disadvantage, right? You said you use credit card loans to kind of get started in real estate, and you guys didn't have like a lot of money. Like when people think of big investors, they think, oh, this person's loaded and he's an engineer, right? So I guess my question to you is there's a lot of real estate agents who listen to this podcast that would like to invest in real estate. And I mean, they educate people on it day in and day out, but they just haven't pulled the trigger yet. So what would be like your advice to them, and how would they approach this situation of, hey, I'm an agent, but I haven't really invested yet and I want to be at Brant's level?
Yeah, so that's literally like one of my favorite questions, right? So I get that all the time. And it all starts with mindset, right?
Yeah.
So you mentioned REI fundamentals, one of my training courses. Just it's everything starts with your mindset, right? And your commitment level. So if if you are truly, truly committed to pursuing real estate and investing in real estate, you'll find a way. And that's basically what I did, and so many others have gone before me, right? And so like the number one kind of excuse that I love to hear is like one, my students or one of our agents, someone I talk to, is like, man, I'd love to invest in real estate, but I don't have any money. I love when I hear that, because number one, that's how I got started, right? It's just a limiting belief. And I'm not picking on anybody. I have limiting beliefs. I have said things to my coaches and mentors, where I'm like, man, I can't because of this. And they're like, really, do you want to hold on to that thought, or do you want to like look for ways to overcome it? And so that's how it starts. And the thing too with real estate, the reason that I was drawn to real estate, like I was literally just walking through like Barnes and Nobles and I saw this book on, Robert Allen, like No Money Down. And I'm like, no money down, like sign me up, because I had no money. And so real estate has a lot of ways to be extremely creative, right? Like when it comes to doing a real estate deal, investing in a deal, there's basically two ways that you can get deals. One is like with money, right, to generate marketing or just go buy a house or go buy a deal. Number two is your effort, right, kind of your hustle marketing to put deals together, bird dogging, knocking on doors, cold calling, all these types of things. You can generate a deal and you can exchange your time, energy, and effort, right, to get yourself into a deal. Kobe, you and I were talking just right before this call, right?
Right.
One of your agents, I met with him at a property yesterday because he's been hustling his tail off, literally driving for dollars, has a deal under contract. I met him over there, and he's saying, man, like, I would love to do a deal. I don't have any, capital right now, but I'm looking to get my feet wet. And what did we talk about? I said, dude, I'll do the deal with you. I'll JV with you if the numbers work, right? So that's what I would say is just, if you're just getting started out and you don't have any money, like be excited about that. Don't be like, oh, whoa, shucks, I wish I could do this, or woe is me. No, like just embrace, like that's where you are on this trajectory. And we all start somewhere. That's exactly where I started. But just know there's as much opportunity out there for you, essentially, as there are with people with money. And then another thing I'll just add to that, with my coaching students, when we do our initial like coaching consultations and things like that, one of the questions I ask them is like, how much money do you have to invest in real estate, or how much are you willing to invest? Sometimes they're like, I got $1,000. Sometimes they're like, I got $1,000,000. Like it varies, but I always have the same response for them, whether or not how much capital they have or if they have none. But if someone comes to me, let's say, for example, someone comes to me, says, Brant, I want to invest in real estate. I have $100,000 to invest. What I'm actually going to tell them is, number one, I need you to pretend like you have no money. Okay. And this is a mindset thing too. And this has been huge for me. And if I'm elaborating too long, just tell me to hush, because I'll go on tangents.
No, this is perfect. Yeah.
But I'll say, hey, I need you to just pretend like you do not have access to that money. You're starting broke as a joke, and you have to figure it out without that. And so what that does, and that's how I started out. So it ingrained in me in this mindset, like, how can I get deals done with no money down?
Right.
Because if someone comes to me and let's say they've got $100,000 and they want to build a portfolio of rental properties, what they're probably going to do is say, okay, I can put about 20,000 down, or let's say $25,000 down per property. Therefore, I can buy four rental properties over the next year. So what's going to happen is, if they go out and do that, there's nothing wrong with that. But let's say they go out and do that. Year two comes along, where they at, like, oh no, I can't invest in real estate because I don't have any money. So they've built that mindset, that conditioned response set. For me to do real estate, I have to have money. And so what I learned from the very beginning was that real estate's very creative. What I need to work on is putting really, really good deals together, because if I put really good deals together, I know that I can get 100% financing. And that is 100% true to me and to the real estate world. It's not inherently true to me. It's inherently true to everybody. So what I would say is, like, work really, really hard on putting really, really good deals together, because what I found is, I always say, like, people say, hey, how do you raise private money, for example? I'm like, well, you got to do two things, right? You operate in honesty and integrity, right? Transparency, and you bring really good deals to the table, because capital, money, private money, lender money, whatever it is, it's attracted to good, honest, people of integrity who have like a legitimate business plan, and they've got a really good deal. And so once you do that, like, the sky's the limit. And I'll even give you, just case in point, in my progression, something I was going through a few years ago. a buddy of mine brought a deal to me to buy 100 acres of raw land. It was really big, one of the bigger deals I've worked up to to that point. Brought this deal and said, "Hey man, like I think we got to buy this. Like it's super cheap. We can sell it for this, et cetera, et cetera." And it was out of my comfort zone, but did enough due diligence research. I was like, "All right, man, I'm all in." So I raised the money for it. Okay. And we raised the money, created like a little syndication deal, boom, closed it. We hadn't closed on it for like 2 weeks. And my buddy comes back to me and he's like, "Dude, I just found an even better piece of land I think we need to buy." And this is like one of my really good
Uh-huh.
friends for a long time. I'm like, "Dude, no, like just no. Like we just closed on this. I did all that. There's no way I can possibly close on this other piece of land." And so long story short, like you've heard the people say like I eat my own cooking, right? Like there's a
Yeah.
lot of gurus who teach it, but they preach
Right.
it, they don't live it. So I eat my own cooking. So I really was thinking about it because my partner is like, and he's out in the field, he's boots on the ground, work with engineering guys, stuff like that. And I'm the money man.
Right.
So he's like, "Dude, you really need to like look at this." And so I had to like really look at him like, okay, what do I teach to my students? Am I exemplifying that? I'm like, no, I'm basically backing down because I'm scared mindset. And so long story short, we ended up closing on that property. Now we put it under contract. We had like 6 months of feasibility, went back and forth, but it was like a no-brainer deal. And I raised all the money for that deal as well. We closed it. And since then, we've closed another land deal and we're about to close another one. And I'm using those same principles, guys, is that if the deal makes sense, we'll always operate with transparency, integrity. We're adding tons of value for our lenders, for our partners on these deals. And I'm taking that same mindset of like, no, I can buy as much land or do as much real estate deals or mobile home park deals as I want, right? Because real estate's very creative. Now, it may mean that I'm creative in negotiating the deal. And that's another reason it's really good to have that mindset that you don't have any money because it forces you to negotiate a better deal. And so
Right.
that's the beauty of taking on that mindset of like, I don't like to use the word like it's a broke mindset, but it is kind of like no, like we don't have any money. How can I make this deal work? It's going to force you to negotiate deals better. It's going to force you to raise money better, things like that. And so that's kind of what I would recommend to someone just getting started out. Like, no, it's okay that you don't have any money temporarily. Like you want to fix that, right? Obviously. But even if you start getting capital, you may want to still have that same mindset and just real transparent. What I do, Kobe, is I raise 100% capital on almost all my deals. Rarely do I put money in a deal unless it's very short term because we can borrow money at like 5 to 8%. So what I do is I raise money on all my deals, which is good for my lenders too, because they're always looking to deploy capital. And my cost of capital is usually in that 5 to 8% range. And then I loan my money out. I do invest my money into real estate, but I invest it with other people, right? Other deals where I can earn 10 to 15, 20, 25% return on my money. And I can borrow at 8 if that makes sense. So, that's just kind of getting a little bit further into it, but that's the progression. It's like you can start with no money down, if you're willing to trade some time, energy, and effort into putting really good deals together.
Right, definitely. I love that because you're operating from an abundance mindset where the opportunities are abundant versus, the traditional way of thinking is I have this much capital myself
Yeah.
and there's no leverage, right? There's no
Yeah.
leverage in just putting your own money down
Yeah.
into everything
Yeah.
and, not being creative like you said, looking
Yeah.
around you and seeing what else can you leverage to make this work
Yeah.
instead of just finding excuses as to why it wouldn't work.
Yeah. And then to a real important point that I want to make too about that. Okay. This is incredibly important is this. So when I'm saying I raise 100% of my capital from other people, I want to clarify though, it's not because I'm trying to avoid all, risk avoidance and things
Right.
like. And if you're out there and you're brand new and you're looking to raise money, what I want to stress to you, like really, really stress to you, is that you take a step back. When I started raising money for deals, I remember I came home one time and I had been meeting with some private lenders and things like that. And a couple of private lenders like said yes, like, in the very beginning,
Right.
when I had not even been trying too hard.
Mhm.
And I came home and told my wife about it. She's like, "That's awesome. Like that's great. That's what you wanted." But at the same time, I felt the weight of the world on my shoulders because it's a big responsibility, right? To whom much you can give it, to whom much is given, much is required. So what I told my wife back then, I said, it is good, but that you have to understand, I was kind of putting in context with my wife, like these are people's retirement funds, whatever source of money is, it's their money, it's not our money. And if anything happens, if anything goes wrong, because I was still in kind of an ugly real estate market and there was a lot of uncertainty, I was like, our lenders are going to get paid. We'll sell our house because we had moved into a house out of the apartment. I'm like, we'll sell our house, we'll sell everything. My lenders are always going to be taken care of. So I've always had that mindset. And
Right.
that's what I'm most proud about in real estate. After, doing 400 some odd deals now, I have 100% track record of performance with my lenders. Even when I've lost money on deals, my lenders have always been paid 100% every to penny that I owe them, that I
Right.
agree to pay them, right? So what you don't want to do is just be like, "Oh, Brant said I can raise a bunch of money and go put in these bad deals and putting good money on bad deals is not a recipe for success." So I just want to really make that clear, is that there is an organization out there called the SEC, Security Exchange Commission, and you can end up in jail and just ruin your reputation if you go do bad deals. I've seen a lot of real estate investors do that. So when I say I'm raising money, I want this to be clear, right? And some of my syndications, I put skin in the game, to make my investors feel good. But you're right, Kobe. Like in today's day and age, and I talk with a lot of people about this. It's almost impossible. Yeah, it's almost impossible to get wealthy in today's day and age without leverage, right? We have to learn to use leverage. Now, it's not always debt leverage. It is in my world, that's a majority of it, but we leverage other people, team members, technology, different models like EXP, for example, is like a great model where we can leverage. But you have to learn to use debt and money to leverage in real estate, or else you're not going to really be able to scale or create wealth at a decent amount. So but I just want to caution everybody, like, it's so important to me. It's like my lenders are like worth their weight in gold, and I just make sure
Right.
it's like anything they give me, they're getting back plus their interest and things like that. And I've never walked away from a deal. I see it happen. People leaving lenders high and dry. So that's just kind of one of my mission statements, is to really take care of lenders first and foremost. And hopefully everyone listening to this has that same mindset. And if you don't, I wouldn't raise money, basically.
Right. Yeah. And I mean, that's probably why you became essentially, you wrote the book on raising private money, right? And then everybody that I've talked to so far, that I respect from an investor's point of view, which is yourself, Chris Bounds, and Matt Gardner, all have said the same thing: is 100% track record
Yeah.
raising private money.
Yeah.
100% they come first, and then that's something that I've seen in a different way for
Yeah.
myself personally as well. Is when an agent joins my team, that agent's business becomes priority over mine,
Yeah.
and I need to make sure they're taken care of because they're putting their trust in me, their life essentially, like you said, in this business, and they chose me, and I have a responsibility, right? Like Spider-Man, right? With great
Yeah.
power
Yeah.
comes with great
Yeah.
responsibility.
Yeah.
So
Yeah.
I love
Absolutely.
that. Yeah, I love that, man. And so kind of going off that a little bit, there's probably a lot of people who listen to this and they are excited, they understand it now, they've heard it, and they get that they need to use leverage, right? But they're still afraid,
Mhm.
and they're afraid to kind of step in and use private money, and use other people's money when they haven't done a deal yet. So from a tactical standpoint, And maybe you can even tie it into, having, if you're a realtor, if you have a real estate license, how that might be able to help. But from a tactical standpoint, would you advise somebody who's never done a real estate deal in their life to start raising private money, or with, 100% financing, or maybe take a step back there?
It depends, right? Which is my answer to every real estate
Right.
question, really.
Yeah.
Like it depends. Like some people, they come in and they're brand new, wet behind the ears. They, if they don't have any, not only real estate experience, no, business experience or construction management experience, things like that, probably, probably not. Like it's not a good idea to just go straight into private money. I would steer them towards like a hard money lender,
Hmm.
and that's how I
Right.
started. Like my first 15, 20 deals were with a hard money lender, and that acts as a good safeguard, right? So that hard money lender's looking over your shoulders. They're in the business of lending money professionally, and they're just a good sounding board, right? So I remember one of the first hard money lenders that I worked with, he said yes to my first 5, 6, 7 deals. And anything I brought him, he said yes, 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 yes. And then one day I sent a deal to him, he said no. And honestly, like my ego was probably getting a little too inflated too quickly, because I was like, oh, David doesn't want to loan to me on this. I'm going to show him. I'm going to go get somebody else to loan to me. And I got kind of irritated by it. And then, I remember talking to my wife. I'm like, David says he's not going to loan me money on this deal. And she's like, what are you going to do? I'm like, I'm going to go find somebody else. And I was like laying in bed that night, and I was like, a little moment of humility and just, of intelligence. And I'm like, wait a second, David's in the business of loaning money. We have a good relationship. He's loaned to me on a bunch of deals. David doesn't want to loan money on this deal. Maybe it's in my best interest to really figure out why. And so I went to him. I was like, dude, I'm not gonna lie, like I got kind of pissed off when you told me that, and I didn't even ask you questions. I was just gonna go find somebody else. Why don't you want to loan me money on this deal? And he told me, well, there's this, this, and this. And to be honest, like it was the biggest, gnarliest, hairiest rehab I'd gotten into in like a questionable area. And I was like, you know what? Those are really good points. And I really appreciate you, man, because I'm not going to move forward on this deal. And so that's when I really learned. I'm like, man, my hard money lender, even though he charges high rates and things like that, he was a team member, right? He was an asset. So when you're starting out, I would recommend the hard money lender route, even if you're somebody new, and you've got business experience, all those types of things. I still think it's a really good place to start, even though your cost of capital is going to be a little bit more, but your learning that you're going to gain from that is going to be, tremendous. And then you can take that into raising private capital, things like that, and just be much more experienced, and just really honestly like be able to provide more value to a lender, being able to safeguard them a little bit better now that you've been through a few deals. And then other options, Kobe, would be, partnering with an experienced investor, things like that. you know but the path for everyone is different. I've trained a lot of people that have come in and done their first deal with private money. A lot of my agents, of our agents,
Yeah.
come to me and I loan to them, but I'm not your typical lender. I can oversee things and kind of mentor them also. But yeah, it's depends for everybody, but I would just caution everybody, before going straight in with private money, if you're going on your own without some type
Yeah.
of mentoring or help along the way.
Right, definitely, because you don't like that's part of being responsible to your lenders, right? Is having the knowledge to actually, follow through to do what you say you were going to do,
Yeah.
and having a little bit of experience. And from what I've heard, having hard money lenders, they're actually there to help you and make sure the deal either works, or if it doesn't work, they're like in your situation, they'll tell you, hey, this doesn't work and this is why. So it's actually a really good way to kind of get started in real estate.
Yeah. And then like for agents or agent investors
Yeah.
listening to this, maybe people on your team or
Yeah.
people looking, it's like there's also the psychology of it as well.
Yeah.
Let's just say like, hey, some people are like, man, hard money lender is so expensive. I've got, my neighbor, or my cousin, or my rich uncle. I can borrow money from them at, 5% or whatever it may
Mhm.
be. And no points, it's a lot cheaper. It's true. But let's say you go out and you do a bad deal, okay, right out from the get go. Like a lot of times, it's not always. It's sometimes a financial loss that people suffer a major financial loss. It wipes them out, and they're not only done like financially, but they can be done psychologically. So I had a deal that I did. The second, I'm sorry, the first flip deal that I did, and it was a horrible experience, and I lost like $5,000 something at the end of the day. But it took me out for a while psychologically, because I put so much time and effort into this deal, and I didn't have much money then. $5,000 is a big deal to me. um, so it's kind of like riding a bike. I'm teaching my daughter to ride a bike right now, and it's a slope. I have 5 kids, so it's been a different process for each one. But if I just put her on the bike and like shoved her, and then she crashed and wrecked, got hurt, like psychologically, she may not want to ride a bike ever again, or at least for a long, long time. And so treat your investing business like that. Like just be a little cautious, like use your training wheels, maybe even for a little bit longer than you like. And if you do that, not only like a big part of being successful in real estate is just staying in the game, right? Like wealth
Love
is,
it.
it's a long-term game. So don't sacrifice the long term for the short term, which I see a lot of people do. I've done it myself on certain occasions. So just keep that in mind. Like, what is your long-term game, right? Like you're
Yeah.
starting at A, right? You want to get to B, right? Like, how do you bridge this gap? It may be in your best interest to pay a little bit higher interest and fees to get that mentoring in the beginning so that you can reach
Right.
your long-term goal, which is the most important.
Yeah, love it. Staying in the game long enough, right? That's always kind of been my motto. It's
Yeah.
persistence. Sometimes it can feel like you're moving at a snail's pace, but
Yeah.
I mean, I'll outlast every single other person that's around me, and I'll
Yeah.
be the only person left.
Yeah.
So it's a great mindset to have. But kind of wrapping this up a little bit here, you're at EXP Realty, you're an agent as well. Kind of walk us through, how that decision went about, maybe, or what are some ways that agents on your team are benefiting by partnering up with you, and how you can actually help agents that are joining us with your real estate investments fundamentals course that I've actually seen a lot of people have some success with as well.
Yeah. Man, so I was an easy sell when I saw
Right.
EXP. And so I've had my license since 2009, right? To kind of like paint that picture, was I got my license right before I quit my job. It was just like, just in case my investing plan doesn't work out, I will do listings or whatever it takes to make sure I can provide for my family. So I got my real estate license as a backup, but I didn't use it much even in my own business, because I had an agent who I was already working with, and they did a great job, and it was like a flat fee kind of thing. And so they listed most of my stuff, my flips, my rentals, all that kind of stuff, and that was working for me in my business, so I didn't really need to change that. And so I had my license, didn't use it a ton, just use it very sparingly over the years. And but the bottom line was my mindset, with the real estate license was, if I was using my license, the fact of the matter, I was trading my time for money in one way, form, even though I was listing my own properties. Like I'm still doing listings, maybe taking calls, emails. I'm trading my time
Yeah.
for a portion of money. So I didn't love that model already, right? Like we love leverage income models and things like that. And everyone on our team knows about, all of the wealth of knowledge that Connor is to us, and the
Yeah.
mentoring that he provides also. So we know how important leverage versus, active income is. So, my license just, it didn't do much for me. And in that sense. And so when I saw EXP, I really saw EXP as a leverage model that I could use to fill up what I call essentially the three buckets of income or wealth creation, right? So we've got our active bucket, we've got our passive income or leverage income bucket, and we've got to create a wealth creation bucket. And it may be too long to kind of dive into that too much, but what I see in the world of investing is people, your first things first is filling up your active income bucket, whether that's a job, whether it's your business, whether you flip houses, if you're wholesaling houses. There's something that we all need to do to make sure that we have enough income coming in on a monthly basis, and it's, for most people, it's active income to meet and exceed your bills, right? Once you do that, now, all right, let's start looking, and you can do these simultaneously, but start looking at adding income to your passive income bucket, right? Rental properties, owner finance notes, mobile home parks, things like that. But an income source where you're able to use leverage and less, maybe a little bit of time, but not much time. And as you start to fill that bucket, you can really begin to fill up your wealth creation bucket. Now you have disposable income to invest in other people's deals, into stocks, funds, Bitcoin, whatever it may be. And so those are the three buckets. And so that's the quickest I've ever talked about the three buckets.
Right.
But when I saw EXP, I was like, EXP will essentially fill up all of those buckets at the same time, right? So if I do or choose to perform listings or listings of my own, it will create income for me and my family. And also, just give everyone some context, whenever I moved to EXP, I run a full-time investing company, obviously. So I had an agent on full-time with my company that was doing all my listings. Okay, so all my listings were going through somebody else. So when I transitioned to EXP, I moved those listings back under my license, and I still was able to pay that person the same thing, by the way, but I moved those listings under my license. So was it active income? It was definitely income, on that side of things. But then what it did simultaneously was it began to fill up my passive income bucket, because I started, mentioning it to other agents, things like that. Hey, have you heard about EXP? Look at this model, things like that. And as my team of agents grew, that income grew, and now it's substantial. It's six-figure income for me annually. And that's but it's very passive, right? It's leverage. There's time involved. I'm not going to say there's not, but it began to fill up that bucket. And then at the same time, EXP was saying, hey, we're going to give you ownership in the company. We're going to give you stock in the company. I'm like, nobody else is offering this. Why? I need to at least take a look at it. And I did. I'm like, I think I like free stock. So that essentially began filling up my wealth bucket, right? And so now I've got like 16,000 shares of the stock. And so it filled up all those buckets at the same time. And we could talk about, the medical benefits, because my wife and I have 5 children. So we save over $1,000 a month just on the medical plan. And there's all these different bells and whistles, as you know. But that was, for me, that was kind of the lens that I put on. I'm very, business minded, business focused. I don't do things just emotionally or whatever, just because it's cool or hip or the next big thing. It was really, I'm like, this is a no brainer business decision for me, because it was going to, be the best thing for me and my family. And that's why I made the switch. And it was, the other story with it was, though, is like, there's opportunities everywhere and ways to make money, but there's also the time factor. And I do work a lot, wife and 5 kids in sports, this and that, travel. And I looked at it, and, I'm also hard-grained to say no to, like, hardwired to say no to a lot of opportunities, because then you're just chasing squirrels. So I've been really good, like, with all the stuff that I do, it is in the same real estate umbrella, right? Like, I'm not, whatever, open up a food truck. It's all in the real estate sphere. But I didn't want to do it, though, because of time. And because it was still fairly new, and I had never heard of it before until I heard of it. And I sat down with my wife. I said, all right, I think it's probably worth at least 30 minutes to, like, watch this video. But I told my wife, like, I really need you to convince me not to do this, because obviously we don't have time. I don't want to add anything else to my plate. And although I knew I wanted to do it, and I had my wife watch the video, and she watched the video. She didn't say a word. She just watched it. And then she just looked at me and she's like, "You better do that." I'm like, "Yeah, I know. That's
Yeah.
the wise thing to do." So I did it.
Right. Awesome. And I'm super glad that you did, because if you hadn't, none of us would be here right now.
No,
So
yep,
yeah,
yep,
grateful that you did, and grateful to be your partner. So really quick, just to wrap this up, Brant, for people listening to this that want to reach out to you, that want to work with you, either with EXP or get your free training as well, what's the best way for them to get in contact with you, or get access to that?
yeah. Easiest thing, just go to brantphillips.com.
Awesome.
Brantphillips.com,
Yeah.
you'll find pretty much anything you want to know about Brant Phillips.
All right. Awesome. Yeah. Keeping it simple, all in the same place. But Brant, thank you so much for being on the podcast today. I appreciate it. I appreciate everything you've ever done for us here at EXP as well. And grateful to be your partner and to continue building out this team of agents that, we've had going on as well. So
Yeah.
thanks again, Brant.
Likewise, my brother. I appreciate you.
Yep, no problem. Thanks you guys for tuning in, and I'll see you guys next week. Take care.